COVID-19 has impacted the mining industry across the globe as lockdowns and travel restrictions force companies to halt or scale down operations. S&P Global Market Intelligence, in a new report, stated that in total, $8.84 billion in mining revenue is classified as at risk. And Latin America is the hardest hit in terms of the value of at-risk production. Over in Africa, South Africa's mining sector underwent a gradual reboot in May. The result was that production in the mining sector in that month only fell 30% year on year after plunging by a revised 50% in April. Gosh, according to data, of course, published by Stats SA. Now, we're joined by the Director of Mining at Mergence Corporate Solutions, Mr. Peter Major, who is joining me now to discuss the mining sector in South Africa and across the globe. Peter, you're welcome. Thank you so much for joining us on the Global Business Report on Arise News. Let's put up this graphic here. I want to take a look at this impact of the mining sector, or rather what COVID-19 has had. Okay, there we go. So South Africa's mining output decline. April, 50% year-on-year drop. In May, it improved slightly to 29.8%. Gold, 60% drop in production in April, improved slightly, 20% drop in May. Iron ore, 66%. Coal, 9.6%. Then building materials, 54%. My first question to you, Peter, is of course the impact on the South African economy, considering what mining contributes to South Africa, if you will.
You bet. This is a serious impact on our economy, but it's going to regain what it had a lot quicker than I think most of the other industries in this country. Certainly better than travel, tourism, manufacturing, retail. Mining's going to bounce back a lot quicker. I think that initial shutdown, it was dramatic. You know, it was 3 weeks. You had to stop everything. And boy, mining got hit as hard as anybody else. But by the end of the third week, mining and government discussing this realized this is suicide. So I think the government, the unions, and the miners have been working together really well since mid-April. How quick can they get all these mines up to close to 100% production as soon as possible? So I think you're going to see dramatic turnarounds when the next set of figures come out, and it's only going to get better. I think mining already is probably close to 80% of what it was before the shutdown.
Okay, great. So in that case, my next question was, is there any, in that case, there is light at the end of the tunnel when one considers mining sales? I mean, I guess those fell only by 29% in April and about 13% in May. So if we look at sales, they didn't fall by as much of a margin as production. So that's good.
You're right. The big surprise, the positive surprise here is metal prices have held up so well. And it's not just precious metals. The fact that iron ore is back to 105, 107. You know, nobody thought in a healthy economy that iron ore would even be $70. So that's a big plus. Coal sales, the price is down, but virtually every other commodity now is higher than it was before the lockdown. So as you've seen, gold is much, much higher, and the PGMs are holding up great. So we're taking our rosary out and thanking whoever we need to. The weak rand has also benefited South Africa quite a bit, but strong dollar metal prices have been a godsend.
Great stuff. All right, so you talked about bringing your rosary out and thanking whoever you need to thank. Would China be one of those nations you would thank? Because I showed that iron ore imports increased about 17% or so, 3-year high in China. So considering the relationship between South Africa and China with regards to the metals, I guess demand from China, would that be one of the nations you'd be thanking right now?
Very much, very much. China, there's no way you could have iron ore over $100. There is no way you'd have a recovery in chrome prices and manganese prices, as we've seen without China. China is consuming close to 40–50% of most of these minerals, other than the precious metals. So yes, China, the biggest country by far that's had the positive impact on these prices and demand.
All right, great stuff. I want to ask you about Eskom because there wasn't. I mean, they depend on coal, of course. Coal production that I think was down about 9.6%. Coal was down 9.6% in the period. As Eskom, there wasn't much load shedding happening during the Q2 period, but I guess load shedding has picked up now. Do you see any impact on the recovery with what's going on at Eskom?
Very much. Eskom is as it is as high a factor as our metal prices. So even with these high metal prices, if we can't get the electricity reliably, we're not going to take advantage of the prices. We're not going to be able to produce. So Eskom is definitely the country's biggest worry now. It is a bigger worry than the virus. The mines are coping with the virus. It's work, but they can cope with it. But how do you cope when you just don't have electricity? And we also know the virus will pass, whether everybody gets it or a vaccine or we just stomp it out. But we don't know, are we going to get Eskom right? It is the biggest risk in mining. It's the biggest risk for this country growing GDP today.
Thank you for that, Peter. We got to, focus a lot on Eskom. I want to ask you about gold now. Okay, so I don't know if this is a bit of a, two tales here. Gold production, COVID-19 has caused a decline, but yet that's been offset by gold prices climbing, I guess thanks to investors seeking a safe haven. Is that enough to stay alive for the sector, or does gold production also need to go up for South Africa?
You're a better analyst than I am. You're so right. The gold price alone is not going to save this industry. This industry's been in terminal decline now for 25 years, and mainly due to policies and regulations. And we keep seeing international bodies saying South Africa needs to change its policies. It needs to alter these negative growth policies and get in policies that promote mining. So South Africa is the only country in the world where it doesn't matter what the gold price does. Our production falls every year. That's been going on for 30 years now, and until we change our policies, it doesn't matter what the gold price does, our production will continue to decline. Unfortunately, it is in terminal decline. We need serious changes in the environment here to get our gold production going back up.
Thank you so much. I just want a quick follow-up on that. Over here in Nigeria, the federal government just had a big announcement with regards to going into gold production and supporting local production here. Is there looking like there's going to be it have to be a significant investment in the mining sector in gold here to get to what you have over there in South Africa? Briefly, if you can.
Yeah. You do need a significant investment. You need large-scale mining, and you need to get away from this zama-zama, artisanal, illegal mining. You need proper large corporations that can mine on large amounts, and it's fully accounted for, that the men work under safe conditions, managed conditions, and that you've got tax and royalty and capital expenditure policies in place that will grow this industry. So it does need big investment, and it needs the serious players to get involved, which means government and the big corporations.
All right, we really appreciate your time. Peter Major, I had a lot more questions for you, but we're running out of time. I'm going to have you back on the show. Thank you so much for your insight with regards to the mining sector in South Africa and what they need to do to improve.